season, the financials, the guidance. We're going to get all of that. First up, of course, is Tesla. Let's face it, this year has been an unmitigated mess. Also, lately, going into the earnings, I want you to look at this middle column, 5 days prior to reporting, the last 5 reports. I mean, the stock has been under a tremendous amount of pressure. Let's bring in Simpler Trading VP of Options, Danielle Shay. Danielle, I want to get an idea of what you're expecting from Tesla and how you are trading or maybe not trading it.
Well, Charles, when you look at Tesla, I mean, what more could be wrong with the news story here, right? You know, when you look at this situation, ideally we're near peak bearish sentiment. I don't think it's quite there yet, but I think that everyone's expecting this report to be bad. So it is possible that it's not as terrible as expected and the stock actually pops, because we've seen that 3 out of the last 4 quarters. So I think that if you're an aggressive trader, that's something you could look for. But I think that the path of least resistance ultimately for the next few quarters is going to be to the downside.
Now, the wild card, though, is Musk, right? I mean, he's got a limited time that he can stay at Doge unless rewrite the rules. I don't think he wants to, show the world his financials. His exit from Doge, would that help the stock?
Absolutely, that would help the stock. And that's something that really could bring in the bottom here with Tesla. I think that if Tesla can stay up above the $200, $215 price point, and specifically if we could get any kind of catalyst that would break this stock up above 280, that's the price point where I think we'd really see buyers coming in. So, a lot of people are watching this stock, watching this report. We want to hear some good news. If we can get that stock up above this level, that would be the positive catalyst.
Yeah, I just looked at it with Mark Newton. I think on the charts, I mean, there's a point where it's off to the races, but it's a fair amount higher. Alphabet reports on Thursday for the March 2025, go all the way over 6 in the last 4 weeks, 6 revisions down. A lot of these companies, they're revising their earnings lower. The street's looking for a lower number, although sometimes that's a good thing. It's a smaller hurdle to get over. What are you doing with Alphabet, Google?
So, Charles, I am holding my long-term shares in this company, but the short-term, it does not look good. I do not like the way that this stock made a new all-time high and then gapped down 7% last quarter after earnings and has continued in a downtrend. This is typically a really disastrous technical pattern, because what can happen is that when the next earnings report comes out, which is this week, it gaps down yet again, and it just continues in that downtrend. So I'm looking at Google, if it breaks the 140 price point, I think we're going to continue that downwards trajectory. Ultimately, at some point, it'll bottom, but I do not have positive hopes for this earnings report, because even if it gets a big move, the expected move is $8. Even if it gets twice the expected move, let's say, that's not going to break it out of this downtrend.
Real quick, the rest of the Mag 7, like any of them going to beat, pop, guide higher, or it's just the better part of valor is just to not be long them, or like not new money going into the earnings reports?
Charles, the two that I'm going to bet on to the upside are going to be Meta and Microsoft. I think that these two have the best potential of trading higher. While I love Apple and Amazon, I feel like those two are probably going to have a little bit more exposure to the ongoing tariff situation. So I'm going to bet on those two to the upside, cautiously, of course, but I'm definitely not dumping my shares in these companies during this overall downtrend.
Yeah, you keep your core positions. Danielle, thank you so much. Appreciate it as always.
Thank you.